everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Tajudeen Ibrahim joins me right now. He is the Director, Research and Strategy. Tajudeen, I can see you. The internet should just be stable because I'm seeing connection unstable. Hello, Tajudeen. Good day. Good morning. Happy New Year, my friend. We haven't spoken this year.
Yes, hello, good morning. Happy New Year.
Yes,
Thank you for having me on the show.
Happy New Year, February. Now, Tajudeen, I don't know if we talked about this rebasing the last time we spoke, but whatever it is right now is out. That's for CPI. Please explain in simple terms to Nigerians watching right now what that rebased CPI, rebased inflation for January at 24.48% means. Explain in simple terms. I don't want all these economic jargons. Let's explain in basic terms and in just a minute.
So in simple terms, what the National Bureau of Statistics has done is to recapture the existing products and services in Nigeria in the Consumer Price Index. Because the last time that we had a rebasing was in 2009. When the Consumer Price Index was rebased to 100 in 2009. That is like about 16 years ago. It has an implication. The implication is that over the past 16 years ago, we have seen new products, coming into the Nigerian market. We have also seen existing products having several varieties. For instance, if we look at cement, for example, over the past 16 years, we have seen new products in the cement sector, for example. If we look at the sugar industry, the kind of sugar available in the market 16 years ago are no longer the kind that we have in the market as we speak. What I'm saying is that we have more varieties, we have more variants existing. So to put it as an example, what the National Bureau of Statistics has done is to widen its nets by capturing new products that have been introduced into the Nigerian market by the companies that produce goods and services. Also to capture new services. For instance, in 2009, in the transport segment of the Nigerian economy, for example, we did not have anything called Uber that we now use because Uber came into Nigeria at around about 2014 thereabouts. And so now we in the convenience of our homes can order for taxis to take us to various destinations in the country. So that kind of a service, for instance, is now captured in what we now call the transport sub-index. So in summary, what has happened is that we now have the consumer price basket capturing more products, not just more products, but also capturing new variants of existing products in the Nigerian market. In summary, that is what has happened.
Okay, if we take a look at the January inflation numbers that came in, indicating that 24.48% was what headline inflation was in January of this year. Like I mentioned at the beginning of the show, some people will have been reporting, okay, a drop of 10% from December and all of that. I know it's not the exact interpretation of that, but with 24%, it doesn't also give us a myth that inflation is declining. How do you explain that, my friend?
And so the way to understand that development is to take a look at the second element of the rebasing. The first element I have spoken about, the expansion of the basket to capture more products and services. The second element is what we call reassignment of weights to each of the sub indices that we have in the consumer price index. When I say sub indices, I mean taking a look at food on a standalone basis, taking a look at transport on a standalone basis, taking a look at alcoholic beverages on a standalone basis, taking a look at accommodation on a standalone basis, and restaurants as well. Those are what we call sub-indices of the consumer price index. So what the National Bureau of Statistics has done is to reassign the weights of each of these sub-indices that make up what we call the consumer price index. What really happened is that the food sub-index, for instance, had a reduction in its weight to about 40% in the entire consumer price basket from about 52% under the previous methodology. So the reduction was then passed to the restaurant and accommodation sub-index because we have more Nigerians dining out, eating out of their homes instead of staying at home, cook and eat. So the report obtained by National Bureau of Statistics suggested that there is need for activities in that segment also to be reconsidered. So lifting or reducing the weight of food sub-index, largely speaking, resulted in the lower inflation that we saw for January month-on-month to 24.48%.
Okay,
If we do not,
Tajudeen,
if we don't capture that,
hold on.
there may be no difference at all.
Yes, hold on. Can you hear me? If you're saying lower
Yes,
inflation rates, lower in terms of nominal, but I don't want us to be caught in the crossfire of nominal numbers from 34 to 24. I hope you understand what I mean, because for 24% general inflation still have the same effect, as it were. Would it still have the same effect, as it were, for a 34% in December in terms of the cost of living crisis, in terms of even the effect on Nigerians? I hope you understand what I mean. So we're not caught in the illusion of a lower inflation number, meaning that inflation in Nigeria is declining, and it's not declining, as it were, even though there could be disinflation. You understand what I mean? Not deflation.
I get you. Yes. I get you absolutely. Yeah. But I think the way Nigerians should view those new figures is to look at it from the January standpoint relative to the rebased index to 100 in December 2024. That figure, for instance, shows that inflation on a month-on-month basis, if we want to view it from that perspective, is about around 10.6% thereabouts. So, which means that between December and January, December of last year and January of this year, prices were actually higher by more than 10%. So, which is also a reflection of the fact that the rebased numbers are reliable. Because if you look at what you were buying last month in December versus the prices in January, most likely at least about 10% price increase materialized. So that is the picture that I believe we should be looking at, and that is what also reflects the reality that we have on ground. It is not that inflation is decelerating, it is that we now have a change of methodology. And under the previous methodology, we had 34.8%. as at December for last year. But the number is now showing 24.48% for January. It does not mean that inflation came down. It only meant that we changed our methodology, and that is the methodology we will be using going forward. This is the reason it is important for Nigerians to pay more attention to what happens to the consumer price index over the next couple of months. In February, they are going to publish the, by March, they will publish the number for February, and that will allow us to gauge what month-on-month increase in prices have been in between February and January of this year. I believe that is the way to look at it.
What does this rebased CPI also indicate around the spending pattern of Nigerians and the income dynamics? You know, because when I saw that yesterday, yeah, and you also alluded to the fact a bit earlier by saying that Nigerians are dining out now, you know, so standards of living perhaps, and as well as our income, evolving income dynamics. And of course, the 70,000 naira minimum wage, actually, because this base year for CPI was for 2024.
So the base year that we are talking about, the rebased CPI, and also the impact on consumers and the consumer spending power can be understood, to my mind, by taking a look at the January, CPI, or more importantly, the January sub index. For food, for instance, food prices were higher, by about 10.6% in January relative to the level in December. And importantly, also, we noticed that in alcoholic beverages, prices were significantly higher by about 14% in the month of January relative to December. And the key message to my mind is that Nigerians are sticking, most Nigerians are sticking to their current consumption pattern. If we have alcoholic beverages prices rising the most, because that is what the numbers are showing, rising the most among all of the 13 divisions of the consumer price index, it means some Nigerians prefer to drink. And that is also reflected in the
January
financials
numbers
of in the
Nigerian
January
Breweries and
numbers.
Co. Yes,
Nigerian Breweries
yes,
recording well over 1
1
trillion
trillion
naira
naira
in
in
revenue.
revenue. Yes, but
Exactly. So
Tajudeen,
what?
the Christmas effect. How about the Christmas effect? Have you forgotten that? To
So
an
the Christmas
extent.
effect, the Christmas effect, the Christmas effect is there, and that was also the period that some consumer companies were also able to pass price increases
Yes,
to Nigerians
yes.
because they know that period you'll be very willing to buy. You will not really mind, because it is festivity, period. So that is what I believe really happened. Consumer spending power will remain, broadly speaking, unchanged. All of us have to consume food. It could only be, food that are priced at much lower prices. But when you look at other, products such as alcoholic products, for instance, you will recognize the fact that some Nigerians would just like to move on with their, lifestyle, irrespective of how low their income is, irrespective of the headwinds that we are seeing in the economy in terms of cost pressure. So I think all of those elements are important. To bring FX into this picture, to my mind, is also very important, because what happens to the CPI, or the consumer price index, going forward will, largely speaking, be dependent on our exchange rates. If we can have stable exchange rates, then we can be expecting a much slower pace of increase in the in inflation rate. But if our FX, is not stable, and if naira weakens against the US dollars, for instance, I think we should be expecting further increases in inflation over the coming months.
Food now in this weighting structure is about 40% from about 51.8 percent that we're seeing. We're seeing other components also being added to it. If we take a look at the constituents of the inflation basket, it's been expanded to 960 from 740. I know we just spoke about this lifestyle pattern, the lifestyle of Nigerians, perhaps getting a bit more, I wouldn't say sophisticated, whether sophisticated too, but a bit stable, even though there's a cost of living crisis. What would you say about that expansion to 960? Does that mean that man does not live by bread alone anymore? And the
So that,
three food, clothing, and shelter is no longer the basic needs of man.
that expansion, to my mind,
Yeah.
is a reflection of what we have seen with respect to the emergence of new industries in the Nigerian economy. It is a reflection of the emergence of new companies in the Nigerian economy. It is a reflection of the emergence of new products by companies in the Nigerian economy. The same companies, that we had about 16, 17 years ago, are not necessarily the same companies that we currently have. We have seen more companies in the in the consumer sector, for instance. We have also seen more companies, or let me say, we have seen more banks. So you would expect more banking services and activities. So it is a matter of time frame, because we have a time lag of about 16 years in this case. Some products were not existing then. So now we have them in existence. So they have been captured. That is the reason we have well over 900 varieties in terms of the goods or the products that have been considered by the National Bureau of Statistics. And it is because consumers, tastes keeps changing. So when you are a consumer-facing company, you also want to change according to the change in consumer taste and consumer lifestyle. Because if you do not move along, chances are that you would be left behind, and new entrants into such sectors will be the beneficiaries in that case. I will give you an example. As we speak, we have for a coffee, for instance, we have what we call 3-in-1. That is a coffee product where
Yes.
you have the coffee
Three in
in
one.
there,
The
the
coffee, the
milk in
milk,
there,
and the
and
sugar.
the sugar in one serve. Yeah, in one serve. But about 16 years ago, this product was not in existence.
Perhaps that was
So
also
it
a response by
explains.
companies to poverty, to the spending power of Nigerians. You understand that we've continuously had that sachetization of our economy, as it were. When water
Yeah,
can even be put in
absolutely.
sachet, which was like perhaps one of those that started that sachetization.
Absolutely.
Yeah.
Absolutely. So it is a reflection of the responses of those companies to how consumers lifestyle is changing, because people are now doing what we call down trading. For instance, if we take a look at food and drink sector of the Nigerian economy, we have in the beer segment, for instance, what we call down trading, where consumers are buying more of value beer products, for instance, instead of buying the mainstream or the premium beer products, for example. So we are seeing that, and companies too are responding accordingly. And I think what really matters in this case, to my mind, is that the overall cost of doing business in Nigeria has been on the rise over the past decade or more. So when you see that happening, it means consumer spending power is reducing drastically. And with that reduction, need for consumers to reassess their purses, their pockets, and see how they can adjust their spending pattern. So this is what has happened over the past in a couple of years. It is not that consumer spending power is improving. It is that consumers keep changing their spending pattern to see what their pockets can accommodate. because of the current economic situation.
Anyway, I'm looking at our time, and I know we don't have so much time left because I actually even wanted to interrogate this further. I'm actually also worried that even though that Nigerians we spend more than half of our money on food, the statistical weight of food in this new CPI has been diminished. You understand what I mean? That means even when we see prices of food go up, the weight of it will not be so much on the CPI, meaning that perhaps government would also take this as, okay, things are going on well. The same for even electricity, gas, I think housing, transport, if I'm not mistaken, their statistical weight also has been reduced. So I'm wondering, okay, if the methodology is saying so, the government may a bit like it that if things are getting worse, statistically, and for those of us that look at those numbers, we will not be able to raise the alarm as much as we should have raised it. I hope you understand what I'm saying. So I do have a problem with that a bit.
I understand what
Yeah.
you're saying. I think
Oh, Tajudeen, the network is not steady now. Can you still hear me?
I can still hear you.
Okay,
Can you hear me
okay,
as?
okay. I can hear you now. Yes.
So I'm saying that we should not view it as as a case of where the impact of price pressure is being masked by a
Yes,
change of
that's the word.
methodology.
It's
I,
been
I
maxed
think I think
actually.
yeah
Yeah.
yeah I think we should not view from that standpoint. I think the viewpoint should be a closer watch or a closer look at what the broad changes in prices look like on a month-on-month basis. I think going forward, it is likely that Nigeria will be reporting uh, uh, seeing lower inflation rates. I think that could be confusing, just like the case of 24.48% versus 34.8% previously. I think there is need to pay attention to the month-on-month inflation rate from February onward. I think that is what will help us to understand, the overall price pressure, price movement pressure in the economy. And my sense is also that the government needs to pay attention to this because if the focus is just on the year on year, it could be misleading because no doubt from the numbers we have run, Nigeria is going to be reporting lower inflation rates over the next couple of quarters on a year-on-year basis, largely speaking because of the rebasing. But when you look at it on a month-on-month basis, you will recognize the pressure is really coming from. And it is important also to my mind for the Monetary Policy Authority to
Exactly. That's where I'm
also,
coming to
take
next.
a look at it from a month-on-month basis instead of relying on the
Year on
year-on-year
year
inflation
basis.
rates alone. Exactly. So the year-on-year basis, to my mind, in the current environment, could be misleading, and it could, paint the picture that Nigeria is now better versus previously. Not
Exactly.
necessarily my view.
Will this bring down interest rates? Cardoso and his team, other members of the MPC are currently meeting now. They would finish the meeting tomorrow, will be briefed. 27.50% MPR, that was where we left off 2024. With what we have right now, you will agree with me that we have positive real interest rates now. Because for MPR at 27.50%, inflation at 24, this should be able to spur investors to bring in money as it were. So we have about a positive real interest rate of about 3%. So I want you to answer that and what you see for the MPC. Do you think they will raise, hold, or lower? Then number two, this real interest, positive real interest rate. Then number three, the impact on households of this, because how would the masses, how should Nigerians even interpret this? Like they say, to not bring down the cost of food in the market. But I must also say that we've seen the cost of food falling in the last few weeks, or at least since this year started, some based on harvest and all of that?
So I want to believe that I captured, the bulk of your question because of, network fluctuation. If we look at it from a monetary policy standpoint, you are spot on. We now have a situation where monetary policy rate is 27.5%, which is above the 24.48%, inflation rate. What that means, like you said, is that we now have real policy rates, that is positive. The last time that we had, a positive real policy rate in Nigeria was about 5 years ago, in sometime around August 2020. So what it now means is that Monetary Policy Authority will take a look at inflation and recognize that, number one, we now have, real policy rate. Number two, to my mind, the Monetary Policy Authority would have to wait and see the publication of more numbers under the new CPI, under the new rebased CPI, for I think for the next 3 to 5 months, to be able to gauge the trend of inflation both on a year-on-year basis and on a month-on basis. The
Oh, Tajudeen.
higher
Okay.
policy rate versus interest versus inflation. Can you still hear me?
Yes, I can hear you now. I lost you at the time. But go ahead. You just have about a minute. Or have you landed on your point? Can you hear me?
Can you still hear me?
Yes.
I can hear you now.
Okay. Have you landed on your point?
I think the final point is that I think the Monetary Policy Authority should hold interest rates constant at their meeting that will be decided on Thursday,
So the
for them
hold
to
should be like
watch
watch and see.
what
Yes.
inflation looks.
Yes. So that hold should
Exactly,
be
that is
watch
what
and
I
see.
think.
Let's see if there will be a moderation in the coming months. So final question for you is coming from a
Correct.
viewer. As rebasing is done based on new products and varieties coming to the market, do they also consider the companies and products that have left the country in the last 16 years or so? That's an interesting question. And let me also add this. The disparity, so much disparity between urban and rural inflation. Urban at 26%, rural inflation at 22%. So should some of us be relocating to the villages since inflation impact is a bit minimal?
So the inflation impact in the rural areas, you would agree with me that it is largely a reflection of the fact that those people in those areas would prefer to supply more of their products to the urban area. And so what it means that what they have for in that space is going to see higher inflation. So if we have rural inflation being much lower than urban inflation, what it simply means is that you don't really see much in terms of demand. It is when you see too much demand that you are emboldened as a business or as a business owner to want to increase your prices. We see a lot of demand in the urban area,
Okay.
and then that sort of emboldens people to hike prices. Businesses that have left Nigeria, to my mind, are also captured in the basin of the CPI.
Okay. I think we'll
Their
leave it.
impact is captured.
Their impact is captured. Okay, so that answers the question of our viewer that sent in that um, question. All right. Thank you very much, Tajudeen, for joining us. The network has not really been so friendly this morning, but thank you very
Yeah.
much. Much of what your insights were actually captured. I'll talk to you soon. Let's see what the MPC does tomorrow. I've been speaking with Tajudeen Ibrahim. He's the Director of Research and Strategy at Chapel Hill Denham. That's the much you can take on today's edition of the program. Thank you all for your company as always. Join me again tomorrow, same time on this channel. I am Nancy Naji, be the best you can be, and be the change that you want to see. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.